You're driving your kids and your neighbor kids home from practice. 4 kids in the back seat. Somebody runs a light and slams into the side of your car. You're hurt. 2 of the kids are hurt. 1 of them is not yours, and the 3 of you end up in the emergency room. The other driver's insurance has a $25,000 policy. That $25,000 gets spread across a car full of injured people, and it's gone before the first round of bills is even finished. Health insurance may help with some of the medical costs, but it doesn't cover lost wages while you're out of work recovering. It doesn't cover pain and suffering, and even though you didn't cause the crash, those kids were passengers in your car. Where does the rest of that money come from? That's what this video is about: uninsured and underinsured motorist coverage. It's the part of your auto insurance policy that protects you when the other driver can't cover what they caused. And the rules around it are different in every state. If you don't know who I am, my name is Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. Uninsured motorist coverage and underinsured motorist coverage do 2 related but different things. Uninsured motorist coverage kicks in when the person who hit you has no insurance at all. No policy, no coverage, nothing. It also covers hit and run situations where the other driver leaves the scene and is never identified. Underinsured motorist coverage kicks in when the person who hit you has insurance, but their limits are not high enough to cover your damages. That's the scenario from the opening. They had a policy, it just wasn't enough. Both coverages pay you through your own insurance company, not the other drivers. That surprises people. You're filing a claim on your own policy even though the accident was not your fault. Your carrier steps in where the other driver's coverage falls short or does not exist. These coverages generally apply to bodily injury, medical bills, lost wages, pain and suffering. This is not a replacement for health insurance. And it's not a blank check. It is injury coverage through your own auto policy when the at-fault driver's coverage is missing or not enough. Some states and some policies also offer uninsured motorist property damage coverage, but that's a separate add-on in most cases. Here's the reality. The Insurance Research Council found that roughly 1 in 3 drivers nationally were either uninsured or underinsured in 2023. 1 in 3. About 15% had no insurance at all, and another 18% had a policy but carried limits too low to cover a serious accident. A broken leg, a concussion, an ambulance ride, and a couple nights in the hospital can blow past the $25,000 limit before you even start physical therapy. That means the person sitting next to you at a red light may not have enough coverage to pay for what they cause. We have a lot of experience writing auto insurance in Nevada, Arizona, Utah, and California. The rules around uninsured and underinsured motorist coverage are different in each of those states, so let me walk you through them. Nevada requires every driver to carry at least $25,000 per person and $50,000 per accident and bodily injury liability. Uninsured and underinsured motorist coverage is not required in Nevada. But your insurance company is required to offer it when you buy the policy, and renewals have to include the offer form. If you don't want it, you have to reject it in writing. One thing that's specific to Nevada is that uninsured and underinsured motorist coverage are combined into a single coverage. You don't buy them separately. If you carry UM coverage in Nevada, you're automatically covered for underinsured situations too, up to whichever limit you selected. Nevada's uninsured driver rate is estimated at around 12%. That means roughly 1 in 8 drivers on Nevada roads may not have any coverage at all. Arizona also requires $25,000 per person and $50,000 per accident and bodily injury liability. Uninsured and underinsured motorist coverage is not mandatory in Arizona either. But just like Nevada, your insurance company has to offer it to you in writing when you first buy the policy. If you decline it, you sign a rejection form. Here's a key difference from Nevada. In Arizona, uninsured motorist coverage and underinsured motorist coverage are legally separate and distinct. They apply to 2 different accident situations. You could technically have one without the other, although many carriers bundle them together. Arizona has a significant number of drivers carrying the bare minimum, which can leave you exposed in a serious crash. California just went through a major change. As of January 2025, the state's minimum liability limits doubled for the first time in over 50 years. They went from $15,000 per person up to $30,000 per person, and from $30,000 per accident up to $60,000. Uninsured and underinsured motorist coverage in California is different from Nevada and Arizona because it's included in your policy by default. Your carrier has to include it unless you specifically reject it in writing or agree to lower limits in writing. If you never signed anything declining it, you probably have it. California has one of the higher uninsured driver rates in the country, estimated around 20%. Roughly 1 in 5 drivers on California roads may have no insurance at all. And there's one more thing to know about California. Underinsured motorist coverage in California is what is called an excess coverage. That means the at-fault driver's insurance has to pay out first, and your UIM coverage only kicks in after their limits are exhausted. Your carrier gets a credit for whatever the other driver's insurance already paid. So if your UIM limit is $100,000 and the other driver had $30,000, your carrier is responsible for up to $70,000 more, not the full 100. Utah works differently from the other three because it's a no-fault state. Every driver carries personal injury protection, which is called PIP, with a minimum of $3,000. PIP pays your own medical expenses regardless of who caused the accident. Once your bills exceed that PIP threshold or you hit a certain injury severity, you can step outside the no-fault system and make a claim against the at-fault driver. Utah's minimum liability limits also increased in January 2025. They went from $25,000 per person to $30,000, $65,000 per accident stayed the same, and property damage went from $15,000 to $25,000. Uninsured and underinsured motorist coverage in Utah is not mandatory, but insurers must offer it. To decline it, you have to sign a written waiver. If you never signed a waiver, your policy should include it by default under Utah law. Utah has one of the lowest uninsured driver rates in the country, estimated around 6%. But that doesn't eliminate the underinsured problem. A lot of Utah drivers carry the state minimum, and $30,000 doesn't go very far after a serious accident. Here's the other thing about Utah that's different. Uninsured motorist coverage in Utah is additive. That means your UIM limit is added to whatever the at-fault driver's insurance already paid rather than being reduced by it. If the other driver has $30,000 in coverage and you have $100,000 in UIM, you could potentially access up to $130,000 total between the two policies. In states where UIM is excess coverage, like California, you'd only have access to $100,000 total. That's a real difference in how much money is available to you after a serious crash. Now, let me go back to that opening scenario. You have a car full of kids, the other driver has a $25,000 policy, your medical bills, your kids' bills, and somebody else's child's bills are all piling up. Without underinsured motorist coverage, you collect the other driver's $25,000 and that's it from the insurance side. The rest comes out of your pocket. Now you can try and sue the other driver personally, but someone carrying a minimum liability policy may not have assets worth pursuing. With underinsured motorist coverage at $100,000, your own policy may be able to step in and help close that gap. In that case, you're not left figuring out how to pay for injuries to someone else's child because the driver who caused the accident carried the bare minimum. The same logic applies to uninsured situations. If the other driver has nothing, your UM coverage is the only thing standing between you and paying your own medical bills out of pocket after an accident that wasn't your fault. Uninsured and underinsured motorist coverage is not the cheapest line item on your auto policy. It's one of the more expensive pieces, and the reason for that is the risk is real. Carriers are paying these claims. The cost reflects how likely you are to actually need it. A great starting point is to match your UM and UIM limits to your bodily injury liability limits. If you carry $100,000 per person and $300,000 per accident and liability, carry the same in UM and UIM. You already decided that's the right amount of protection for someone else if you hurt them. It makes sense to protect yourself and any passengers at the same level. If you have an umbrella policy, check whether it extends over your UM and UIM coverage. Some do and some don't. That's a conversation worth having with your agent. And this ties directly into something we covered recently on the channel. Your declarations page shows your UM and UIM limits. If you have them, pull out your auto deck page and look for lines labeled uninsured motorist bodily injury and underinsured motorist bodily injury. If those lines aren't there, you either declined the coverage or it was never added. If you're not sure whether you have it, call your agent. That's a 5-minute conversation that could save you tens of thousands of dollars. If you declined it years ago to save on your premium, it may be worth revisiting that decision. If you want a quote from our team or you just want us to review what you're currently carrying, the link is below. We write auto insurance in Nevada, Arizona, Utah, and California, and we can show you what your UM and UIM limits look like and whether there's a gap worth closing. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.